Fitbit is offering new details today of its highly anticipated initial public offering. The company is seeking a valuation of as much as $3.3 billion. It hopes to raise as much as $478 million. But with competition from companies such as Jawbone, Garmin, and now Apple, can Fitbit bankers justify that valuation? Well, let's find out. Bloomberg News' own Drew Armstrong joins us with details. Drew, good to have you with us.
Hey, guys. How's it going?
So what do you think? $3.3 billion? I mean, they're going to get it probably because the company's, what, profitable? And that makes all the difference?
It's a real business. They have about $745 million in revenue last year, $100 in profit. They make a product that people buy, and a lot of them continue to use it, which is sometimes an unusual thing in the tech world when we talk about valuations. One of their big challenges, though, is that a lot of people get these. Many of them are given as gifts, and then they stop using them after a few months. It's a real challenge.
Yeah, well, it's kind of like the diet, right? So, like, everyone, like, goes on a diet, and then after a few months, they give up. I mean, I'm sorry. Like, that's just...
Yeah, but the diet doesn't come with a $3.3 billion valuation,
well,
right?
No, but there are diet companies, right? So I'm guessing that they've got a lot of new users, right? Because what, a third of the people actually don't continue with their Fitbit?
They do. So I mean, think about how you get one of these. I don't know if you guys have Fitbits or not,
actually,
or a fitness tracker.
Don't.
So a lot of times these are given as gifts over the holidays. 50% of the company's sales last year came in the fourth quarter, meaning that instead of you going out and saying, "Hey, I really want a Fitbit," someone is saying, "I need to spend $100 on a gift for my significant other. I'm going to get them a Fitbit," and they're going to say, "Oh, this is kind of neat." They're going to play with it for a while, and then a lot of them tend to drop off. It's an issue because these guys are trying to figure out not just how to sell you a Fitbit, but then how to add on other services and get you to continue using it, get your data, get you to go to their website, all of those other things that keep generating revenue from after a one-time purchase.
Who's going to make the money from this?
Well, I mean...
The Foundry Group, SoftBank, right? I mean, are they selling any shares?
I don't think I actually don't know. I'm going to have to check on that for you right now. I think one of the interesting things that Fitbit is really looking at right now is going into the corporate wellness market. It's probably one of their biggest paths.
Explain how that would work, right? You get your premiums paid for by the company, or you get some kind of health insurance if you follow a regimen.
You're Michael Bloomberg, and you're looking at your health insurance costs, and you're thinking, would it be great if my employees got up and walked around a little bit more? Give everybody a Fitbit. No suggestion. And then, you're able to track their data. They're going to sell this to companies they're talking about $20,000 for a dashboard. You can see how active people are. Do your employees need to be, getting up from their desks more, walking around? Should you be having some kind of salad bar?
Box?
Here's an idea. Here's my suggestion. Instead of a lunch break, what about a fitness break then?
There you go.
There you go. Okay, problem solved.
Healthcare's a huge amount of expenses. If you can get that down, it's a really big deal for companies. That's where
when is this supposed to price?
They are starting to do the IPO itself is going to price in the next few days. It's going to be $14 to $16 a share. That $3.3 billion valuation, that's kind of at the high end of that. And they say that they're expecting to get it right now. We'll know the results in the next few days. Who's the
bankers?
I can't remember off the top of my head. Sorry.
All right. That's all right. We'll find out. They'll probably have a Fitbit waiting for you.
We'll see.
Yeah. Well done.
Do you use one, by the way?
I don't. I have a Garmin.
Ah.
Oh,
yeah.
A competitor.
Indeed.
All right. Well done. Thanks very much, Drew Armstrong.